Is buying stocks stupid? David Jaffe with beststockstrategy.com, and in this video we're going to go over whether it is intelligent or stupid to buy stocks. So there's a saying that long term the stock market always goes up, but if we look at it historically and not just in the United States, that's actually not true. The Japan economy and the Japan stock market hit a high in around 1990. And over 30 years later, it still never eclipsed that high. I also think that in the US equity market, we're entering a relatively mature phase where in 2022 and the beginning of 2023, we've seen a lot of volatility. We've seen many market-leading stocks down by 50, or in some cases with Tesla, which at one point fell around 70%. But I definitely believe that relying upon past price action and historical data when it comes to the United States is not necessarily a guarantee that the future is going to be as bright as the past. As we've seen in the economy, a lot of people are losing their jobs. Many people are losing hope. There's a massive increase in artificial intelligence, and jobs which were previously done by people are now being replaced by machines. So I think that there's going to be a shift in the economy, and I'm not entirely certain that the stock market is going to continue going up. So where does that leave us? Well, you can sell options. Now, the problem with options is that your maximum amount of profit is going to be the premium that you collected, because essentially you are going to turn yourself into an insurance company. The issue is that many people, because selling out of the money put options has a very high win rate, that many people get greedy, they trade too large, and then if you run into a situation like 2022 or March 2020, then they run into a margin call and then they're forced to close out the positions at the most inopportune time, because options are leverage products. So when the market goes up, you do really well and you beat the market. When the market goes down, then you end up losing a lot of money as well. So is there some type of hybrid model where you can combine options, the high win rate, while also reducing your portfolio volatility and also perhaps owning stock? Because remember, as we said earlier, when you sell options, your maximum profit is going to be the premium that you collected. But when you buy stock, especially if it's something that is oversold, then you can participate in the upside of the stock and you can profit significantly more than simply collecting the premium. Now, I know that there's an argument where buying stocks is significantly less capital efficient, but let's leave out the capital efficiency perspective in this argument because this is more of a superficial basis. If you wanted greater detail and explanation about capital efficiency and stocks versus options, then I have that in my options trading education course at beststockstrategy.com/memberships. But in my opinion, just to give you a high level view, I think that if you're going to trade options, you have to make sure that you protect yourself against black swan events, and your primary goal should be to reduce portfolio volatility and to make sure that you limit your drawdowns. And the best way of doing this is by buying options at specific times to protect yourself against a large volatility expansion event or to protect yourself against a major pullback in the market. Additionally, I definitely believe that there are specific times, specifically when you're highly contrarian, that it's worthwhile for you to go long stock or long indices. For example, when Amazon was trading at about $185 and then it fell to about $82 or $83, and I do understand that it's impossible to call the bottom, but I definitely believe that, let's say when Amazon was trading at about 110, you could have sold a 95 put, collected a lot of premium, rolled that position down to 85, and then taken ownership of the stock when you felt that it was cheap enough to validate your downside risk. There are other things that you can do if you wanted to protect yourself against the downside risk. You could buy an at-the-money put option, or if you even wanted to, you can use options to simulate a synthetic long in the equity. For example, you can buy an at-the-money put option and then you can sell an in-the-money put option. By doing this, then your risk is going to be the amount of premium that you paid for the long put option. You're going to collect a decent amount of extrinsic or time premium for the in-the-money put option that you sold. And as the stock appreciates in value, then you're going to make money on the in-the-money put option that you sold, because for every dollar that the underlying stock goes up, then because the delta on that in-the-money put option is so high, then effectively you're going to profit close to as much money as you would if you were long that equity. But because you're long that at-the-money put option, then you're actually going to not have that downside risk. So to summarize, do I believe that it's stupid to own stocks? And the reality is, no, I don't. But I do think that it's important to take into account the capital efficiency and the lack of capital efficiency of owning stock. Additionally, you are kind of guessing when you're buying stock, because there really isn't that much strategy where you're taking ownership of the stock and then you're just simply hoping that it goes up, which is fine because stocks in general tend to go up. My personal belief is that the stock market in the United States is going to be more sideways or potentially grind down, but I don't believe that we're going to see like a 7% or 8% increase annually in the US equity market that we've seen in the past. I think it's going to be probably more so like 3 or 4%. And in that situation, it's definitely worthwhile to combine selling options, buying options at specific opportune times to protect yourself against black swan events and to decrease your portfolio volatility. And at the same time, I definitely think it is important to take ownership of market leading stocks, or potentially even better, some indices, and hold on to them for long term. And that way, instead of profiting simply by collecting option premium, you can actually participate in the upside of the stock. So that's a long-winded answer, and I hope that this video was helpful and beneficial to you. Please watch the video right here, or maybe it's right here, I'm not really sure. But YouTube is very good at recommending content to you, so it definitely thinks that you're going to enjoy this video. And if you have any questions, then leave a comment below. I do my best to answer everyone's comments, and I definitely appreciate your attention, so thank you so much.